So good afternoon, welcome. Thank you very much for giving up your hugely valuable time. My name's Andy Hooper from Global E-commerce Experts, and this is part of our successful expansion to Europe webinar series. Thank you very much for joining us. There is an Expanders Facebook group. If you've not joined that, it would be great for you to do that. And if you'd like to hashtag on any sort of social media, of course you can do that, hashtag Expanders series. Now, Global E-commerce Experts, we've expanded over 2,000 sellers now into Europe. So we know exactly what it takes for someone to make that a success. The steps they need to take, the movements, what they need to do, where they need to put the stock, when they need to do it, all of those things is absolutely critical. And that's everything from shipping, customs, warehousing, VAT, fulfillment, translations, account management, responsible person, which is massively popular right now, along with label compliance and product compliance. So, when you're thinking of expanding into a new area, all you need to think about is, okay, I'm expanding into Europe. Who do we need to talk to? GE. That's all you need to talk to, all under one roof, and we've got everything covered. Now, when I say it's all under one roof, it's not quite one roof, because we also have facilities in other parts of Europe as well. So we've got a warehouse in the Netherlands, we've got Germany, France, Italy, and Spain coming very, very shortly. So all of those mean that we can support our sellers. I've been in e-commerce for over 10 years now. I started flipping things on eBay like many, many people, and then started selling silicone watches on Amazon after that. Ironically, I've now got a silicone watch on my wrist, although it's an Apple watch with a piece of silicone around it, which is broadly the same thing as what I had 10 years ago, except this one seems to cost me more money. Anyway, that's enough about me, because I'm super excited, because today we've got an amazing guest with us, someone that we have partnered with, because lots and lots of sellers are talking about selling. It's something that's on our radar. There's lots of aggregators out there. And the great thing with that is that it's becoming popular. The good news when things become popular is there comes a bit of an interest around that. But when I started looking at some of those, the value in which they were giving our sellers that we work with was very, very poor. And that's where we came to with Michael. So Michael, hi and welcome.
Hey, Andy, thank you so much. Really looking forward to chatting with you today, and hello to everybody that's listening.
Fantastic. So Michael, do you want to just give us a little introduction about you? And I know we're going to go into your presentation in a second, so there's going to be a bit more about the business there, but a bit about you.
Yeah. So I'm from Northeast Ohio here in the United States. So actually very close to the Pro Football Hall of Fame. When I say football, I mean American football from that perspective. But that's about 10 minutes from our office. But I'm partners at a private equity firm here in Northeast Ohio with my uncle. We have several different businesses currently, brick and mortar retailers, spirits businesses, population health management company that we grew to 9 figures, and we still have that today. So yeah, I'm excited to chat through really what we're doing in the Amazon space, because it's just not in our company's DNA to do things the same way that everybody else is doing them. And like Andy mentioned, we looked at the Amazon aggregator space of like, hey, how can we acquire Amazon businesses? And initially we looked at it as a big benefit, buying Amazon businesses for 3 times what 1 year's profit is. But just because we could end up doing that doesn't necessarily mean that that's what we should do. And there's obviously a lot of Amazon aggregators that are out there acquiring businesses currently. And I have no bad feelings whatsoever towards any of them. I think that they do a great service. But really where we're unique and where we're different is the way our philosophy as to how we started is we got behind on the seller's side and said, like, where's the opportunity? And we try to find gaps in markets in any industry that we've gone into in the past. And we try to think, where's the pain point? And where we see the pain point in the Amazon industry is just what Andy mentioned, which is the multiples are a lot lower than if you were to sell a brick and mortar retailer, an RV business, any other industry, you typically get a much higher multiple than what you would in the Amazon space. So we asked ourselves an important question. What would we do if we were to if we were to be an Amazon seller, and if we wanted to sell our business, what would be the most important thing for us? Number one is the multiple, the profit multiple that you'd end up getting. But then the second thing that we find that's extremely important if we were in an Amazon seller's shoes is the terms of that purchase. So we started with thinking of the seller first, and then kind of reverse engineered how it would end up making sense for us in the long run as well. So that's kind of the thought process. And David, if you can go to the next slide, that would be great. And we'll just start diving in. So for today's agenda, there's really 5 things that I want to cover. Number one, an overview of the NCAP 33 team. I'll give you a little bit of background further on myself and our team members. Number 2, we'll talk about the traditional way of selling your e-commerce business. If you were to sell through a business broker or other aggregators, what does that normally look like? But then number 3, a new way of maximizing your exit through NCAP 33, which is our company. And then 4, we'll be talking about when you should consider selling your business, when is too soon, when is too late, so to speak, and when's the perfect timing. And then we'll finish with a question and answer. So let's go to the next slide. So this is, there's 2 slides here on our team. So I'm the president and CEO and one of the founding partners of NCAP 33, and our entity name is NCAP A. But I'm partners in our private equity firm with Johnny Sirpilla, serial entrepreneur. He actually in the United States did a very large consolidation, the RV retailer space. Him and his business partners acquired 150 to 200 RV retailers here in the United States and took that company public for about $3 billion 6 years ago. It's a company called Camping World that he was partners in. So he's partners with me in this. But also really all the other ventures that we have going on as well. Sean Doherty's our COO. She was the founder of a tech company by the name of Mophie. She built that up to $250 million a year in sales, ton of Amazon sales, ton of Shopify sales, and also brick and mortar retailer as well. She sold that business a few years back. So she's our COO. But if anybody's seen the iPhone chargers where essentially you can walk through an airport or through the mall and actually be charging your phone. It's an actual battery pack. That essentially was Sean's business. Laurent Truc's our head of M&A. So if anybody is interested in talking with us further, I would connect you to Laurent. He has owned and operated his own Amazon business and actually sold that in the past. And he's our head of M&A, and he performed brief due diligence on the business. Court Corsi is our chief investment officer. He's really our venture capital backing. He's been part of 21 different unicorns at a seed level through his venture capital firm. And at Tomorrow Ventures, him and his business partner, Eric Schmidt, who's also the former CEO and chairman of Google. So Court is our venture capital backing. And then there's James Gilbert. He is our chief revenue officer. He built a very large cryptocurrency business, took that public for a multi-billion-dollar market cap. He's out of Sydney, Australia. And then he also sold a very large social media business to Living Social for $320 million a few years back. So David, go ahead and on to the next slide, please. And this is the rest of our team. We've got a head of business development. We've got operations team that Chris and Zach owned a digital marketing agency previously. They don't anymore. But they've got a ton of e-commerce experience, built 400 e-commerce businesses, primarily Shopify businesses, but they're part of our operations team. We have internal investment bankers as well that have actually successfully transacted the strategy that we're about to talk about here today. And then also my cousin Bo there on the very far right. He is our head of marketing, and he is the son of Johnny. So let's kind of talk through what it would look like if you were to sell your Amazon business today. There's really 4 different pain points that you'd realize if you were to list through a business broker or sell directly through an aggregator. If you list through a broker, one thing that you'd probably realize is you might talk to some less qualified buyers. Somebody gets a hold of your financials. They try to qualify for a loan. They might not necessarily have the means to acquire your business. And you really waste a lot of time talking to buyers that might not necessarily be qualified. The next pain point that you'll realize is low ball offers. Normally 2 to 3 times what 1 year's profit is very, very common for you to get. Now, what a broker will list your business for versus what it actually sells for are oftentimes two very different things. So, if you talk to brokers, by the way, brokers are awesome. I have nothing against brokers. We work with brokers. But oftentimes there's a big discrepancy between what a list price and what a business actually sells for. So normally 2 to 3 times profits is the offers that you'll get. Then on top of that, you'll end up getting bad financing terms. So if somebody offers you 3 times profits, maybe it's only 1.5 your profits on the front end, then the additional 1.5 over time. So you're not really getting all the money up front, or it could even be in the form of an earnout. There's a lot of aggregators that are offering maybe 3x up front and then a possibility to earn an additional earnout over and above the 3x that may or may not come into fruition depending on the growth of the business. And to their defense, it could happen if they grow the business too as well, but it is a variable for sure. And then there's expensive closing costs. If you list with a business broker, it might cost you 10 to 15% of your exit price. And after all that, you might be thinking to yourself, well, maybe I'm selling my business sooner than what I should have. So if we go to the next slide, here's kind of the benefits of selling to NCAP 33. Number one, you will get 50 to 100% more when you sell to us than what you will in any other scenario. And we really built this model thinking about the sellers first and ourselves second. So that's the first reason why people would probably come to us. If you want more money for your business, that's probably why you would want to come to us. We're a qualified buyer, significantly better terms. You'd get significantly most of the money up front. Actually, all the 5X would end up being up front. And I'll explain about the multiple here in a second. But very clean deal terms as far as what the purchase price is at closing. Minimal transaction costs, and you get to enjoy the profits over the 9-month period. And I'll explain more about that aspect in a little bit here. So let's go to the next slide. So the way that we're different than other Amazon acquirers is we have a very fast process. You send us your financials within a week. We'll be able to say yes or no to the business if we'd like to move forward with an offer. Point number 2, I think that probably every aggregator might say this, that they have the best team, and there's a lot of great teams out there. But I do genuinely believe we have the best team. We've got a ton of retail experience, but we also have a ton of M&A experience. We've been part of several multi-billion-dollar IPOs. We've been part of other SPACs that essentially have happened in the marketplace outside of us. So we've been part of retail and e-commerce and Shopify. So we do have a lot of experience. Probably the main reason why somebody would sell to us is we pay top dollar. We're willing to pay 5 times EBITDA, which is twice what the industry average is currently. But it's in the form of a win-win structure where it's essentially an option agreement. So if we go to the next slide, I'll start to explain a little bit about that. So the way that an option works is we essentially have a 9-month period where we would acquire the business between the sign of the contract and 9 months out. So the acquisition wouldn't necessarily happen today. It would happen over the next 9 months. And the benefit for us there, because even though we're paying more than market value for the business, it has to make sense for us as well. And the way that we're able to make sense of that is, since we're not technically acquiring the business today, we're gaining many, many businesses under option. We will end up eventually having $50 million of the EBITDA under option. And even though if we look at the siloed businesses, we're actually paying 50%, maybe even 100% over what market value is for those individual businesses. But once you look at collectively $50 million of EBITDA and $250 million of revenue, for us acquiring that size of a business collectively, it's actually a great deal for us to pay 5X. So again, has to make sense for the sellers. It's win for the sellers because you're getting 50 to 100% more selling to us, clean deal terms, all cash up front. But it's also a win for us because we're aggregating options. And then we essentially are acquiring them in a lump sum transaction. And also something that's unique with us is we actually have our exit event planned by the end of the year is what we're planning on. So the way that that ends up working for us is if we're buying these businesses for 5x, which is a win for you because you're getting more than what you get literally anywhere else. It's also a win for us because we would have aggregated a lot of EBITDA in which we would end up being able to sell ours eventually for larger than 5x. So there could be a multiple arbitrage there. So that's kind of how it's a win-win scenario. So let's kind of talk through if your brand is right for us. So the first thing that I'd mention is we are focused on Amazon-centric brands. You'll see that we mention FBA a lot. We work with a lot of businesses that do FBM as well. So we're very open to FBM and FBA. We're really primarily focused on private label brands, but winning products with strong ratings and a ton of positive reviews. We really like to see that moat to where it's very hard to penetrate that from competitors. Attractive market place where we're not looking for the next pet rock that's going to be here today and gone tomorrow. We're looking for brands that are long-term sustainable in the marketplace. And the fourth thing is the right scale. We're looking for businesses that are doing over $5 million a year revenue. And I know that there might be some people on this call that you're not there yet. So that kind of pivots into what we discussed previously of when's the right timing. At least for us, it's when you hit at least $5 million a year revenue. But for you, just to give you just some basic advice as to whether you work with us or not, what kind of advice or value I could add to you. It's a big misconception about selling your business is thinking that you should sell your business when things start trending downwards. And I know that that might sound crazy to some people, but a lot of people are like, hey, gosh, my business is trending downwards. I should probably sell my business now. There are not a lot of buyers that are interested in buying businesses that are trending downwards. We like businesses, not just us, but other buyers when they're trending upwards. So when your business is doing the best, that's when you should consider selling. And another time that you should consider selling is many Amazon owners saw a COVID bump in 2020, right? Unless you were in like the travel industry or something like that, maybe you didn't see a COVID bump, you might've seen a decline. But because of that, if you end up waiting until next year or the year after, then there's a possibility that your sales have declined a little bit. Doesn't mean that it's not a good time for you to sell your business. It's just a story that you'd end up having to explain as to why the sales decreased. So right now is a great time to look at selling because 2020 was a successful year for most Amazon sellers. But then also, if we do have some sellers on here that are in the US, the capital gains tax rates could end up increasing next year. It could end up going from a 20% tax rate up to a 40% or even a 45%. So it certainly makes sense from a tax perspective for the US sellers that we have on the call here today or listening to the recording for you to consider taking advantage of the fact that you had somewhat of a bump last year, if you did. And then if you're in the US, you're certainly paying a lower tax today. I'm not a tax advisor, so that's my disclaimer, but you could pay a lower tax today in the scenario that you're in the United States now in comparison to later on down the line. So those are just a few things I'd like to mention. Go ahead and go to the next slide. All right, so it's important for you to kind of understand, since we're not actually acquiring the business today, when do we start adding value? And that's where we started thinking about like, okay, if it's going to be an option period, we're not actually acquiring the business today. We're just essentially getting an agreement in place that once we go to call the option or once we go to acquire the business, it will essentially be 5x cash up front, various different aspects of the deal that we're agreeing to. And we're also paying you a trailing 12-month multiple on when we go to exercise the option. So let's say that we go to acquire the business in September as an example. We would look back at your trailing 12 months from then. So if you ended up having growth between now and September, you would actually be able to maximize that growth in comparison to us putting a value on the business today. And then maybe that value is less than what it's going to be in September. So it benefits you there. Another way that it benefits you is we start adding value to your business right away from day one. We would obviously work with global e-commerce and see where we feel that we can add value. But if it's performance marketing, supply chain management, brand development, marketplace optimization, obviously you've got an unbelievable business in global e-commerce that's helping you with so many different aspects, especially transferring your business into the EU or bringing your business into the EU. But if there's other ways that we can add value, we have an operations team with a ton of skill as well. We're not charging any fees for that. The only way that we make money is by acquiring the business. And if we end up helping you put more money to your bottom line right now, even though that means the 5x multiple that we'd end up having to pay is a larger dollar amount that we'd have to come up with, that's short-term thinking for us to look at it that way. The way that we look at it is if we can help you right now, we're buying a more stable business. And then also when we end up having our exit event, there's more EBITDA that we'd be able to enjoy a multiple on as well. So you have a buyer here that is entirely aligned with your success. Normally, when you talk to buyers, you might say that my EBITDA is $1 million a year. And the buyer ends up saying it's only $500,000 a year because they're trying to, there's two different ways that buyers can negotiate. Number one is the multiple. So they get you down from a 3x multiple to 2.5. And if that's not a negotiation point, maybe they're not looking at the 3x, pushing that down, but they're saying, okay, well, what are we buying EBITDA on? Maybe it's maybe we can look at the EBITDA as not $1 million, it's 500,000 because of certain add backs. We're really, really flexible on the add backs that we were essentially able to add back into the P&L, and all of it's towards GAAP standards. I'm not trying to get too technical, but basically what that means is we put everything at a level playing field. We're not saying here's what EBITDA is that's beneficial for us. It's a general global worldwide standard as to what EBITDA is. So again, we're trying to set up the most fair deal terms that we possibly can to help you get a much larger multiple than what you would get on your own, but then also all cash at closing. Go ahead and go to the next slide. All right, so that is everything. I think that I covered all the points there. So I will pause real quick. Andy, do you have any thoughts, questions, comments, or anything that you'd like to add?
I think that the really important part here is that, when we started along this journey together, that, what we were looking at is, people were selling for 2 times what their EBITDA was. And to me, that just wasn't fair. And where we got to was, well, okay, there's a much better exit for these people. Yes, it's about grouping people together, but actually with an amazing team, that really is a possibility. And people have to see that as an amazing opportunity. If you are below the 1 million, and you're thinking, well, that doesn't quite work for me, then still get in touch with us, because there might be some things we can do to support you in the background to start getting you towards that process, to start getting you towards there. Andy, we're looking to exit. We're not quite at that level, but what can you do to support us? There might be something we can do. So get in contact with us and talk that. But I think, Michael, I think the key thing here for people to understand is that, this is very real. There's buyers waiting for this stuff, isn't there?
Yeah, absolutely. I mean, as far as, where we're at, most likely what would end up happening, just so everybody on the call knows, we would essentially end up being the acquirer. There could be a simultaneous close with a third party, but it most likely would be us. But in either scenario, you would end up getting your 5x. And there's many different, the way that it kind of makes sense for us is, as we look at the SPAC market, the private equity market, the family offices, or other strategics, it's really, really attractive, and it kind of creates a win-win. And the way that we have always looked at philosophies, and we even look at this in our population health management business that quite honestly doesn't have a lot to do with e-commerce. The way that even that business is structured is entirely a win-win. And we try to think of it that way, because if you can create a business model to where it's genuinely a win, not just for the sellers, but also the buyer as well, then you should have something that should be successful in the market. And I also love being part of businesses that get people's head turning and like, well, you could either love it or hate it, but you could say that you've never heard of anything like that before. And I think that that's a pretty exciting place to be.
I totally agree. So let's open it up for questions now. Please start putting the questions into the chat function. There is, you should see on the left-hand side of your screen, Q&A. There is an option to put some questions in there, and we'll go through and start answering those questions as they come through. So please feel free to send those questions through. What does that look like? When will I be ready? How long does it take? All of those sort of questions that you might be having in your head right now, then, please put them forward. There's no such thing as a stupid question if you don't know the answer. So let's get those questions in, and we can get those questions answered for you. And then from there, we can then support you and look at how you can take that forward. Okay, so first question in. What sort of interest is there? So obviously there's two types of Amazon seller. We've got what we call an Amazon seller and a vendor seller. Is this focused just on sellers and not vendors, or could vendors be involved in the process as well?
We're open to vendors. We're open. I mean, obviously we would have to understand the business better, but we certainly would be open to the conversation. And there's also others that are on vendor central merchants that we're in discussions with. So absolutely, we'd be open.
Fantastic. Okay. Okay. So let's next question. Okay, we'll move on to, let's get some questions coming through. So yeah, there's a question about JVs, but we'll touch on that separately if that's okay. And we'll go there. But yes, we could certainly have a chat. We're going to send some contact details out after, so we can get in contact and speak to you directly. Any other questions coming through? Let's see if we can get any other questions coming through. So yeah, I think this is really for companies that do have strong Amazon sales. That's what they're after. Now, I think the question is really, what about retail sales, Michael? What if they've already got a brick and mortar shop? How does that, how will that affect it?
Yeah, so I mean, right now we're really focused on e-commerce natives, and it's kind of funny. Obviously, you'd rather say yes more than you'd like to say no, but you also have to be disciplined with what we're doing right now. And right now we're focused on e-commerce natives at this point. So not at this point. We're looking for 100% e-commerce. Could be Shopify, could be WooCommerce and Amazon. Doesn't necessarily have to be. It could be eBay and Walmart, or a collaboration of various different online platforms. But we are at this point looking at e-commerce only.
Fantastic. Okay. Okay. Any other questions coming through? Let's just hold on for another couple of minutes and see. So I think that's interesting, actually, isn't it? The sort of retail sales part, but then the other marketplaces, because a lot of the other aggregators are all around Amazon. But if you're opening that up to, because the reality is that many sellers are already operating on, let's take the US, Walmart or eBay or many others. Here in the UK and Europe, there's a ton of marketplaces that they might be selling on as well. And I think that's really important to understand, that if you're selling your business, you're going to be selling that bit as well.
Yeah, no, absolutely. I mean, we are, Amazon is incredible, and we love Amazon, and we like businesses that are primarily focused on Amazon, but we also love businesses that have Shopify sales and Walmart and various different other e-commerce channels. We're just extremely bullish on the e-commerce industry as a general. We asked ourselves A pretty simple question about a year ago. Is there going to be more or less stuff sold online within the next 5 or 10 years? And I think that the answer that we came up with was ingenious. We said that there's more stuff that's going to be sold online in the future than what there is today. Obviously, I'm joking a little bit, but certainly we believe that things are going to continue to keep on scaling upwards, and so anything e-commerce we're very open to.
Yeah, fantastic. Okay, all right. Let's see if we can get any more questions coming in. Doesn't look like any more questions at all. So, Dave, let's move to the next slide. Please carry on with your questions if there's many more questions. So, if you want to get in touch with Mike and us around what this looks like for you and how you can get involved, then please get in contact with us. Drop me an email in the first instance, andy@globalecomexperts.com. Drop me a line. We can talk about it further. We'll chat through what you're already doing, how you're working with us already, what's going on, and where you're up to, and then we'll make sure that's the right fit, and then hand over to Michael as the team requires, because that way we can make sure we're really doing a great job for them, supporting them, but also making sure and supporting you at our end. Look at it as a free consultancy call with me as well. That's a great way to look at it. So we'd love to hear from you. I would love to speak to you. If you're looking to do that sale, then you can do. Would that be fair, Michael?
Yep, absolutely.
Fantastic. Okay, let's go to the next slide, which should be. Thank you very much for your time. Thank you very much, everyone, for your time. It's great that you've been able to spend your time with us. We hope that's been useful, and we hope that that's been able to provide you some value, some ideas, some thought. And if you're listening to the replay of this, it's absolutely critical you get in contact with us. If you're not listening to the replay and you're interested, get in touch. This is an amazing opportunity for people to have a 5x rather than a 2x. And I don't know about you, but if I was selling my business, I'd much rather have a 5x than a 2x. So get in touch and let's see how we can support you making that sale. Any further comments from you, Michael?
No, other than the fact that Andy, so appreciate you, appreciate Ricky and Rebecca and David and everybody on your team. It's been so awesome being able to build a relationship with you in global e-commerce, and you provide such an unbelievable service for the e-commerce community. So we're really appreciative of everything that you're doing.
Fantastic. Well, thank you very much for your hugely valuable time as well. It's great having you on. Thank you very much to everyone, and we'll see you on the next episode of the Expanders webinar series very, very shortly. Thank you very much.
Take care. Thank you. Bye.
Cheers, everyone. Bye.